We've got a lot of things to talk about today with the dock workers strike, the Iran missile attack on Israel, the hurricane. We've also got the Chinese Golden Week going on right now. There's so many things to cover. We're going to get right into it. But before we get going, smash that like button, subscribe if you've been with us for a while and haven't done so yet. Check out the Trade Cave store, link in the description, as well as the channel bio. We've got some new products for you to view here on the Trade Cave store. Let's get into it now, though. All right, so we got the port strike, right? So they are looking for two of the main things, I guess, that are coming through on this is that they are looking for better pay and automation protection. Now, one of those things I can agree with, one of them not so much. The better pay, yeah, probably. That's probably necessary. That's probably necessary in most industries, to be honest. Automation protection, that one's I can't agree with as much because honestly, automation is the future. We're also going to end up in a situation of having a smaller and smaller population going as we move forward through time here. And automation is how we are going to remain competitive and productive as a nation. So, I mean, fighting automation is as silly as the government fighting crypto. It's just eventually going to happen. Nothing you can really do about it. And trying to fight it is really just sending us or causing us to fall further behind our competition globally. So I don't really agree with that one necessarily, but yeah, better pay I can get behind. Anyways. So, and we've also said that, let's see, what's the other thing? They're talking about how this could destroy the economy, not destroy it, but like, bring it. They said this guy specifically, this guy, I don't remember his name, but he's the longshoreman union rep there, talking about bringing the nation to its knees, causing people to lose their jobs and stuff. But that's really just saber rattling to strengthen his position in the negotiations. He's playing hardball with them, and he's doing his job. And he's coming with the rhetoric, and it's pretty scary rhetoric. But I'm personally currently just viewing this as saber rattling. Also, the saying that within a week or two, the nation's going to be on its knees. I mean, we're already in October. A lot of places have already been preparing for the holiday season for that Q4 push. A lot of products are already stateside now. Anything that's like on-demand shipping from abroad is probably going to be impacted greatly, but you've got like retail and stuff. They've pretty much already got a lot of their stuff ready. Now, some of the things like bringing in iron ore and like lumber and stuff through the ports, that could be an issue potentially. But some of the stuff, not as much. We'll see. We'll see how it plays out. If it's really going to be a $5 billion per day impact. I think the biggest impact is going to come from the hurricane. We'll talk about that in a minute. But then yesterday, you'll notice that in the mid-morning-ish, the Iran shot some missiles at Israel in response for their own attacks, eliminating the leader of Hezbollah. That prompted this attack, and now they're both doing their rhetoric where Iran is saying this is just a taste of what's to come, and Israel saying we're going to hit you back. So that is becoming an issue as well. Also, we've seen this play out several times already just this year. We see a dip followed by a rip. We specifically see bigger moves coming out of oil and defense stocks like RTX and LMT. Those are going to see some pumps coming soon. Energy is going to see some pumps coming out of this as well. Basically, anyone that develops rocket engines and stuff for war is going to see a pump out of this. It's normal. I think the majority of the market will see its recovery from this particular event pretty quickly. The one that might lag a little bit here is the hurricane. Now, where's the news? I don't know. The hurricane that swept through the southeast of the United States. That is probably going to have much more long-lasting and larger implications on the economy and the market at large than this strike or the Iran missile attack. And the reason for that is this is destroying real businesses. This is destroying real jobs. This is going to skew the data that the Fed is getting to make their decisions. Now, we've got Iran's going to the war fears is going to cause a spike in the cost of energy, which is going to increase inflation, right? And then you've got the hurricane that has, destroying homes and businesses and is going to ravage the economy of the Southeast, which is going to cause larger unemployment. So we're going to have rising inflation and a larger read of unemployment for a little while there, which is going to throw the Fed's data all out of whack. That's one of the reasons we saw the big dip yesterday, is because a lot of these things coming through all at the same time are showing less certainty of what the Fed may or may not do next month in terms of that next rate cut. So that's why we're seeing a lot of this. All this happening all at once is basically why we're seeing that's creating uncertainty for what the Fed may or may not do. Now, a lot of this, aside from the hurricane, of course, could play out and be done within a couple of weeks or a month, just in time for the election to come through, and then for us to get some clarity, some certainty on who's going to be in office, and then we could see things run from there. The last thing I want to talk about is that it is Golden Week in China, and Golden Week in China is pretty good, at least for crypto markets, because we've got a large Chinese population not at work. Idle hands tend to do things like invest, and we also know that generally on holidays in China, we do see pumps in crypto. Chinese investors do like crypto, and they have a whole week from October 1st to October 7th in order to invest in things like crypto, play the stock market, do other sorts of things. I don't know how many days of this week that their markets are going to be closed. I'd have to look at that a little more closely, but I do know that the Chinese holidays, at least these longer ones, especially New Year, Chinese New Year, and Golden Week, tend to be times that they are pumping up Bitcoin. So we're going to go ahead and take a look at that right now. So Bitcoin, we got a bit of a drop off the last 3 days, right? We came right to the 200-day moving average and bounced just like I said we would do, the 200-day moving average. And of course, the 200-day moving average is a little lower than I said it was before because I was using my fib bands for the 200, and it decoupled from the actual 200. So the 200 was a little bit lower, and it came right to that 200, and it is bouncing from there. As long as we stay above $60,000, we should be okay on this one. This is the pullback that we kind of needed. Could we go lower? Of course we could go lower. But the thing I like here is these momentum, the stochastic momentum oscillators here. Notice how the orange one, the slow one, is still pointing up while the fast ones are coming down. And this blue one will start curling over. Then this yellow one will start curling over. This purple one might just bounce off the orange one and go back higher. So that's what I'm looking for. I'm looking for something like that to occur. And then we will see things drive higher as we come through on this, and we could get this double bottom sending us to the all-time highs for Bitcoin. So that's what's going on today. It's important to stay calm, realize that a lot of this news is likely going to work itself out pretty soon. The hurricane is probably the biggest actual catalyst that we need to be concerned about in terms of how that's going to have an impact overall. We are seeing some increasing prices in the Dixie, the DXY, which is the dollar index. That is actually seeing some increases, as you can see, as a result of the last couple of days here now. But we've seen this before, right? We've seen this play out before right back here, August 28th, and that ended up being a bear flag. So these three here could be a bear flag. Now, the only thing that makes this a little different is that we are over the 21-day moving average for that. But we're reaching the top of the top of the oscillator here for the fast moving momentum oscillators, while the orange is staying all the way down at the bottom here, which is very similar to what we saw back here and right here, right? Both of these were bear flags, and I'll draw them real quick. Both of these were bear flags. We had a bear flag right here, and then we had another bear flag right here. And what was happening? The oscillator came up, peaked, came down, right? And then the two fast moving ones peaked here on September 11th, and then came right back down again. And we are likely to see that again right now, potentially see those two fast-moving oscillators, the yellow and the blue, peak here in the next day or two, and then come back down on the dollar index. So I'll be watching that closely for that information there. And then we also have, let's see, what's the one for oil? Let me see, I have it on here for indexes. Let me see, where is it at? I don't know. I think it's just U.S. oil. Yeah, there we go. U.S. oil. All right. U.S. oil has also been seeing a bit of an uptick. Now, this one's a little more concerning because, so this one was a bit of a bear flag, right? A little bit, came down a bit, but this what's happening right now is we're seeing the orange, the slow moving one, come up. We're seeing the blue, the fast, and the purple, the midterm one, bouncing off the orange and the yellow turning back up as well. So all the oscillators are starting to point up. The momentum starting to point up on oil. So that is going to be your inflation there. Once we get above this trend line here on oil, on US oil, boom, we're going to see this thing, and we're right on it right now too. We're going to see this thing come up potentially like it did right back here, just like this move here, right? How much percent was that? Let's have a look from the let's see, from the trend line up, it was about 10%. So we could potentially see a pretty quick and easy 10% on oil here. This is going to be your BPs, your ZOM, your Chevrons, and yeah, so it could come up to 80 a barrel for the US. So let's go ahead and look at this one. What's that? Occidental. We'll see some up moves on that. Yeah, so we're already up 2%. The last, we've been seeing a tear on this. It's September 26th. We've been seeing an absolute tear on Exxon. Let's see. Was Chevron? CMH or something, CH. Here, I'll just type it in. CVX, that's what it is. Same thing here. We've been getting an inverted head and shoulders on Chevron. We get above this 200-day moving average, we could easily find ourselves back up at 164, another $13 there on Chevron. What about BP? British Petroleum. Let's see here. They also, same thing. They're breaking this 21-day moving average right now as we speak, and that has room all the way up to the 200-day, which is up at 35 from its current 32. So it breaks this downtrend. That could be a powerful move up, and especially if it gets over the 200-day moving average that it's been under for a while. Let's see. Let's check out Oxy as well. Same sort of scenario on Oxy. It's performing a double bottom here. It's over the neckline of the double bottom. All it needs to do is hold where it currently is today and move up a little bit higher, and we could find ourselves back up at almost $60 from 53 on Occidental. So yeah, the oil play is already kind of coming through on that right now. So that's pretty interesting to see all that come through. One last thing I want to talk about. Let's see. Let's take a look at Disney. See what Disney's doing today. All right, we got our bounce. All right, so I might actually be going into this today. I'm going to take a look at the smaller time frames a little bit later, and I might go on into a play up to potentially $96, maybe even $98 on this one here. Now, I do want to see what happens the next day or two. I do want to see it not break the 21-day moving average, but yeah, I'm pretty excited about this. Again, I'm going to play it back up again one more time. I think I'm going to try for that. We'll see, unless it looks like it's going to be a head and shoulders, but that's all. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.